dive into a topic of what makes a great investor from first principle. What are some of the key ideas for people who are listening who are considering becoming an investor? How would you describe a good investor in your perspective?
Well, first of all, it's not about a high IQ, luckily for me, and anyways, right? And it's like Warren Buffett says, you know, if you have a IQ of 160, you can give away 40 points. It really doesn't matter, right, above those level. To make the extreme example of that, I mean, you've seen long-term capital management in 1998 went bust. I mean, they literally had Nobel Prize winners running the fund, right? So it's not about IQ, it's more about the temperament. It has temperament combined with the curiosity and a humbleness. And I think I've done my share of mistakes in terms of being humble enough. And every day in the market is, at least for me, is a part of being humble and reading the information. Because some of the time, or most of the time, the market is the wisdom of market. That's that word. But some of the time, it's like, you know, the crowd's going crazy at the French Revolution or something. I mean, so you need to separate those two things. When is the market telling you something wise? And when is it, you know, going to the guillotine and going crazy? I mean, you don't want to follow that mob, right? So that's one thing. But in terms of the personal part, I think you need to figure out what's your circle of competence, you know, what's one's own interest. And obviously, or not obviously, but it should align with your own interests. And I'm lucky that I don't know much about biotech or shipping. I'm no expert in that. But in some companies and in some areas, you know, maybe financials, industrial, something, those kind of companies, I have an interest and I have kind of a circle of competence. And I don't think it's not the size of the circle, but now it's knowing its boundaries that is key. Because once you start stepping out of that, being because that sector is hot, or someone said something about, and you heard a stock tip. So I mean, then you're kind of really going astray, I think. And I think the key, at least for my part, has been the opportunity to keep on learning, right? And learning isn't, you know, memorizing a formula or doing some Greek math work or something like that. I mean, Stephen Cohen said it best, right? It's not about, it's math doesn't give you an edge. I mean, everyone owns a calculator, owns an Excel spreadsheet, that's no edge, right? So it's about all these other things. And those are things we can work on. And I think, for my part at least, it's been tying that together with a more stoic attitude to the market. Because, I mean, you know, the share price doesn't care. I mean, we know what you or I think about it, right? It does what it does. And in the long run, it's a weighing machine. It's not a voting machine. But in the short run, it does all kinds of things. And I think keeping a focus on what can I control, and don't compare yourself to others, right? Keep your own scorecard and don't let yourself be dragged away what other people, I think, that quarter or that year or something.
Yeah, very good answer. So I just wanted to add on that as well, because you mentioned some key attributes, but it's always fun to invert the question in Charlie Munger terms. And what are some of the things you should definitely avoid? How would you make that list? Like things to avoid?
Well, I think, well, you mentioned Munger. I mean, there's the three things that can go wrong, right? It's leverage, liquor, and ladies, right? So try to keep those things, not too much of either of those things. I think that's a good start, at least. Yeah. But I think avoiding those three things and comparing yourself too much to others. Actually, we have customers, right? So they have we have a promise, and we're going to deliver, and we do deliver a participation in the global value creation. On a risk-adjusted basis. Beside that, I mean, there's always a fund that's going to be better, or someone has done this and found that company. I mean, all those kind of things, which distracts from the real business of the business, which is, for our part, finding good companies, able to thrive despite the macro noise, and focus on those things. What can I control, and what can the company themselves control? Because I think that's the exact same thing, which distinguishes good companies and good investors and bad companies and bad investors.
Totally. So, I mean, you've been many times to Omaha. So explain, why do you go there every year? What was the first experience like? What do you take away from going there? And why do you keep investing to go there year after year?
Well, rewinding the tape back to 2009, and when things really went astray in the financial markets, and sitting in the midst of that myself, it was a search for something else, right? A kind of a pilgrimage, finding another truth than what we learned at school, which worked in theory but not in practice. And the whole thing about Buffett, Omaha, and all that. Is a cathedral? Is a place for thinking about things that do work in practice? Maybe not in theory, because in the inefficient market it wasn't supposed to be like that, and you were supposed to do all the kind of things. So I found it very liberating going there. First of all, because it's not just an annual meeting. I mean, it's like a 3-day event, and you meet like-minded people. And you bump into, I mean, it's a very low-key event, despite being, almost 30,000 there. And so this year I bumped into, Bill Ackman, and people are walking around. It's a very kind of down-to-earth atmosphere, and people are approachable. But again, it's a bit like going to church. If the message was different every time I went. I mean, that's the whole point of going to church. It's supposed to be the same message, right? And for my part, it's been very back to the Stoic part of things. It's a place where you can once a year calm down, go back to basics, first principles, what really matter, and be reminded of that. And in a way, on a personal level, it's a bit like having two very smart grandfathers. Now Charlie Munger passed away last year, but for many years it was like this smart. Grandfatherish like figures, which has been both a place of learning and a place of contemplation for my part.
And you plan to keep going there?
Yeah, I do so. So we booked the tickets for next year. So it's always the first weekend of May. And if anyone looking for a traveling tip, they're welcome to reach out. And there's some tips and tricks how to spend the weekend in Omaha. But it's definitely to be recommended. And even though sadly Munger passed away last year, so it has changed a bit. The new management team is on stage and so on. But it's still worth going.